For more on today's housing numbers, let's bring in Michael Feroli, chief U.S. economist for JPMorgan Securities. And based on data compiled by Bloomberg, Michael's one of the most accurate forecasters on housing, making him a Bloomberg best economist. Michael, welcome back to Bottom Line. Always good to have you on.
Thanks, Mark. Good to be on.
Michael, Julie Hyman was just mentioning something to us. The S&P 500 Home Builders Index up nearly 30% today. Home Builder ETF is up as well. Where's the dichotomy? The news was not good today.
I don't think the news was good at all. I think the best thing you can say is what Julie mentioned, which is the data does tend to be volatile, but that's not a lot to hang your hat on. I think it looked pretty bad across the board to me.
Well, Michael, so far this year, new home sales account for about 5% of total home sales, and that number's usually in the double digits, around 15%. How long is the housing market going to be in trouble?
Well, I think home construction is going to be a lot longer for that to pick up. I think home sales will probably follow the course of the overall economy and the job market in particular. I think one of the reasons home sales have lagged is because there's just not a lot of confidence in the labor market. And if that starts to improve, I think home sales could pick up later this year.
Well, Michael, we have a chart that shows how much home prices have declined in the 4 regions of the United States. The Northeast has been particularly hard hit, with home sales dropping over 57%. And in the Northeast and the Midwest, was this due in part to the lousy winter weather?
I think it could be partly due to winter weather. It wasn't quite as bad in February as it was in January. And also we saw still pretty steep declines in the South and the West. So maybe there was some weather there, but I don't find it that convincing.
Then what were the causes of the price declines in those other regions?
It's hard to say. I mean, we just have weak sales across the nation, and that's obviously not helping pricing. And credit may still be an issue. In the latest lending officer survey, we saw that mortgage loans were the one category of lending where lending standards were still being tightened.
Michael, this is all part of a nasty cycle. The current inventory of homes gets cleared in part by cutting sales prices and by the construction of more inexpensive homes, but that then pushes down sales prices, which in turn pushes down property values. How do we get out of that cycle?
I don't think there's any easy answer. I think what you really want to hope for is overall economic growth, and that gets people moving to different job locations and gets that turnover going. But I don't think there are easy policy solutions. I mean, we tried a few of those the last 2 years with home buyer tax credits, and those only gave really temporary boosts to home sales.
We are seeing that home builders are putting off new construction, and that means permits are at a record low. On March 2nd, the chairman of the Federal Reserve, Ben Bernanke, appeared before Congress, and he said, quoting here, "There's no demand for construction to build houses, and so the construction industry, in his words, is quite reduced." Quite reduced doesn't come close to telling the whole story, does it?
No. We're still seeing job losses in construction employment. Those people in that industry are suffering very long unemployment spells, and they're not being able to find work in non-residential construction because that cycle is still ongoing in terms of its declines.
And Michael, it's interesting because our economics editor Michael McKee was talking about just that. In the construction industry, the unemployment rate is down more than 20%.
Mm-hmm. Yeah, I mean, as I said, it's very bad in that industry, and this is a very long housing cycle in terms of the downturn. Usually housing downturns are intense, but they're brief, and this has been intense but long, and so I think that makes for some very bad labor market outcomes.
How much are foreclosures adding to the overhang of unsold properties?
I mean, I think it's hard to say for sure, but that's certainly something that is weighing on pricing, because about a third of existing home sales are distressed sales, and those tend to go for a lower price, and that brings down prices overall.
Michael, in our last minute, you started by talking about the psychology of all of this. Does the psychology start to turn around when those jobs numbers, the jobless rate, starts to drop? Is that when people have more confidence to go out and maybe not buy a home, but at least start looking for a home, which is the initial stage?
I think so. I think that's really the most important thing here. Certainly we've seen mortgage rates come down a lot, and it's only done so much to give support to housing. And I think what we really need to see is more sustained, strong job growth.
All right, Michael Feroli, chief U.S. economist, JPMorgan Securities, joining us from New York. Michael, always good to have you on and get your perspective. Thanks so much.
Thanks, Mark.